thank you all for being here. These panels are a lot of fun. Richard, wherever you are out there somewhere, thank you for putting this together. You've done it very well for many years now, and it's getting better as you go. So I have been given the task of moderating these clever people to try to pull out of them some guidance for some of you in the audience who maybe want to get into the billion-dollar bucket, or maybe you want to find investors and partners and friends in that bucket. And so we're going to run through first, I think, and just ask everyone to do a very brief intro. What do you want to see? Whom do you want to meet? What kind of thing do you want to see while you're here? And also, what don't you want to see while you're here? To give a little guidance to someone if they're going to come up to you. What do you want to see and what don't you want to see? Very, very briefly.
What I want to see is people like Ira, who's made a difference, who's not only helped his family office grow, his multi-billion-dollar family office, and if you've looked at, I mean, this guy usually drops the mic, you close the show. So this has been a lifelong passion and dream of me, for me to sit next to you and for me to talk in front of all these people with you. You don't know, I'm having the best day of my life. But what I'd like to see is people who are making an impact in the world, who have the capital to make a change. And the returns are enormous, they're staggering.
Okay.
It's incredible.
Okay, good answers, good answers.
But what I don't want to see is, there's nothing. Everybody here
Okay.
I actually like to meet everybody.
Okay.
What I don't
That's
want to
good,
see
guys.
is you not talk to me. How about that?
Okay, perfect. You want to see everyone. I like it. Okay, Ira, what do you want to see and what don't you want to see?
First and foremost, honesty and integrity. And I want to see innovative, very thoughtful opportunities where it's a win-win, where we can get involved. I just met somebody here, and thank you again, Richard, for this. I met an incredible startup here, and I think there's a lot we could do besides capital, making introductions to help them superpower and super accelerate their growth. And so looking for good people to partner with.
Okay.
Those are both good descriptions. We're always looking for good partners, integrity, things that have been mentioned. But we're always looking for quality investors interested in congruence with the same things that we are interested in, which is investment opportunities of return that are significant and risk that is very controlled and measurable. And that's what produces good relationships over a period of time.
So let me interrupt because I don't think there's anyone who doesn't want to see opportunities that have great return with a controlled risk. So I need you to be more distinctive than that. Everyone wants to see opportunities with great returns and controlled risk. Can you be any more narrow than that, any more distinguishing?
Yeah, I think it's like mountain climbing, if I'm going to use the initial.
Yeah.
If you know how to get to the top of the mountain with all the equipment, you probably can achieve it. So I was here, I was watching the crypto panel before with 3 or 4 of my people here. And the point is, it starts with an incredible process to identify the potential and an incredible process to determine the risk in a world of surprise, competition, innovation, and change. And you have to synthesize all those things because people always talk about it, but then we say, well, how do you define it and how do you implement it?
Yeah.
So I think it's like you have to see it and do it to achieve it.
Okay, that's better, that's better. Rodrigo, you want to answer the question of what you're looking for and what you don't want to see here?
Yeah, absolutely. I mean, as a house who traditionally invests very heavily in private assets and alternative investments, we have close to 50% of our assets under management in one type of strategy or another. We're always actively looking for partners and managers who can really make a difference in their space. We work with very niche managers, smaller managers, who we can actually talk to and think that we can add value to that conversation, versus working with big platform companies. So that's what we're looking for. And not looking for is not talking to people, pretty much.
You'd like to be talking rather than not talking.
Absolutely.
Good point, good point. So I really, in asking that question of what you don't want to see, no one has taken the bait and send away anyone in the room, which I expected to have happen. But Simone, I'd love to hear your comments on what you're looking for in being here and maybe what you're not looking for.
Thank you for having me here. I think I want to see good ideas, smart people, but people that will value the way that we care about the balance sheet of the bank. I think during this year, balance sheet became very important. We saw the crisis on the regional banks, And I think I would love to see people that really give value to a bank that has 180 years in tradition, has a strong balance sheet, Tier 1 capital of 25. So people that value quality. We work as a family office, almost. Being a bank, a broker-dealer, and asset management. So people that are interested in that, we are not the biggest, we are not for everybody, we are not big lenders, we are risk-averse, but I'm sure there are investors that will appreciate that. And I think I don't want to see, it's exactly what Rodrigo said, lack of communication. I think when you talk to people, communicate, always you have an opportunity to come up with an idea and to do some type of business or partnership. And even if it does not come up now, it will come in the future.
Okay. Very good answers. Very good answers. So let's carry on with another question of a similar nature. What, in your experience of looking at investment opportunities and picking some winners and maybe picking some losers too, but I'm sure we all picked winners only here. What have you seen that might be useful advice for someone in the room who's building a business or an investment vehicle of some kind? What advice might you give to people here? Just one little piece of advice, what will make more likely to make them successful and help them be successful. And Simone, you want to?
Be close to your clients.
Be close to your clients.
Be close to your clients, mainly when the market is down, when the market is negative, and when you have problems. Because people love to give a call to clients when market is up, and they say that you are wonderful returns. But I think the secret to longevity, to sustainable business, is really be close to the client and walk with the client in the negative times.
I'm going to offer, take the moderator's prerogative and just complement that and add to it, because the quality of your relationships, the relationships you really want to have good quality will be much improved if you're talking more often when things are hard and things are going wrong. And what that leads me to is that you actually want partners, investors, friends who will help you, will be a mentor and a guide. And even if you don't need it, if you're only successful, then you may not need that sort of thing. But by talking to them when things are difficult or going wrong, you're going to be in a much better position in the long run. So that's very good advice too.
100%.
Yeah, that was it. Rodrigo, you want to comment?
Yeah, I would say if you're starting a family office, whether it's a single or multifamily office, just take it slow. I think generational wealth takes a long time to build. New wealth takes a long time to build. There's no reason why people need to go out in a hurry and deploy all of that quickly and not try to find good solutions, find a good tech stack for an office, and see exactly how you're going to run that business. I think a lot of mistakes are made right at the beginning, and then it's very, very costly to change later on.
Perfect. John?
On the communications point, I think it's really important, which we've talked about. Communicate your problems mostly in writing, and also your good ones, and verbally or orally. But I think among the most important single ideas is a clear understanding with your funders of their emphasis on diversification, because most of them have a very big asset, and the most important decision is, do they want to keep that proportion, what proportion, how, and the tax consequences of it.
That's a very good comment. It's the first time it's come up here on this panel, at least, and the idea that all of us have some diversification, a lot, in fact, if we're any good at what we do and want to be here for the long term. So being aware of how you might provide some diversification for what your investor and what your partners are doing is very important.
Because almost all these businesses are started by one big investor.
Yep.
With one big investment.
Yep.
And how do you handle that?
Yep, exactly. Ira, some comments on this?
So I would say two things. One is, first and foremost, is who is the person that's presenting the opportunity? What are their values? Who are they all about? What are their values? What are they all about? Because trust is so critical. The other thing is to listen very carefully, ask questions, peel back the onion. Don't assume if a guy says or a gal says I make 10%, how do you make the 10%? Is it fees? Is it interest? Is it this? Is that? Peel back that onion and ask a lot of questions, because that's how you find out exactly how things are working.
Cool, I like that. Ramona?
I just have three things to say. It's always look for something that's low risk. The second thing you want to look for is high profits. And the third thing is extreme leverage. And when you combine those three, sky's the limit.
Perfect.
Can I add
Yes.
something that I learned from Mr. Joseph Safra?
Oh, yes,
Yeah.
the man himself.
The man himself, we have 2 ears and a mouth. Listen to the client. Because I think when we are maybe younger, more junior, you go and you prepare your pitch and you go and you say, I have this, and you don't listen what the client wants. And I think the most important thing, listen first and understand what the client wants before you start offering whatever you're gonna offer.
Okay. So let me take you off script a little bit from what Richard and his team provided us. And I'm kind of curious, each of you is here because you have had some success of some sort, presumably a fair bit of financial success to be here. I'm curious if you can look back 5 or 10 or even 50 years ago. What happened that generated that success, or that really is the reason why you're sitting up here today, if you can even identify that? We'll start with you, Mo. Yeah, sure.
For you to run $1 trillion company, you have to have a visionary. Someone that knows if you want to be a millionaire, there's a blueprint. If you want to be a billionaire, there's a blueprint. If you want to be a trillionaire, there's a blueprint. You have to envision. Sorry? If you want to achieve that, it's like a roadmap. You can follow what the greats have done.
So did you have such a blueprint that you followed 5, 10, 20 years ago? I mean, not that you're at $1 trillion yet, but I know you're
Of course,
getting there.
I've had mentors, but I've read thousands of books, and those were my mentors, from Warren Buffett and understanding how he does things to Ira here.
So you might be boiling it down to have a good mentor or several or many.
The only
And
way
listen.
I've ever succeeded is because I've had mentors, and I've had a lot of mentors. I routinely pay $50, $100, $250, $1 million for mentors, for me to spend time with them so I can get to know them, see
good.
how we align, and then
I like it.
move forward, because it's not what you know, it's who you know.
There is that too. Ira, some comments on what triggered your success or your family's success some years back?
I had when I first started my career, I had an MBA and I joined the Chase Manhattan Bank. And at that time, I was in the real estate department and they were laying off people. People were getting fired. And I started to get in that groove of what difference does it make? You take that 3-hour lunch. And then I woke up and I said, my gosh, if I'm going to take a 3-hour lunch, I'm never going to go anywhere. I gotta work harder. And I sort of developed this concept that this desk, this is my store. This is the Ira J store. And when you come in here, I'm gonna know everything about every product on the shelf. I read every loan document, every lease, no matter how boring it was. And I was able to pick up the details and the nuances that are so critical a lot of times in due diligence that just make a very big difference. And working hard and knowing everything about your space and how it works and how to tweak it is so critical for being successful.
Cool.
I think all those things are true, but the central thing I would focus on is assembling a talented team and all the people around me that I can find, that the different people over time, they have different approaches, different talents, different emotional quotient. We relate to each other in different ways, but I believe in team decision-making, open systems. Single person makes the best idea, single person makes the worst idea. Well-managed teams make the best ideas.
For me, it was taking the leap. I was on what would have been a kind of like a railroad single track career in wealth management, well, starting in private client back in the day, giving away my age, I suppose. But I took that leap. I went out into the market. I started a business. I ran that business for 15 years, and then eventually had my exit and came back into the world of wealth management, and here I am today. So I think take those chances.
Okay.
I think hard work, I have to echo some of my panelists here, hard work pays. I think you have to deliver more than what you are asked for, but I really believe in teams. So I have this motto that I have to hire people that are better than me, and that's how we're gonna grow.
Bingo. I will add to this the comment on team and the importance of team. And I do not know a man whose name you'll know, Jack Ma of Alibaba fame in China. I do know his first investor. His first investor has been a great friend of mine for almost since that far back, 20 years ago. My friend was sent to China to find someone in the online, emerging online store business to invest in. Actually sent by SoftBank, by Masayoshi-san. And so my friend went and he interviewed a whole bunch of different people that were starting businesses, a bit like Alibaba maybe. And so the question is, why did he pick Jack Ma to make this founding investment, if you will? And it was because Jack Ma did not come by himself or with one person. He came with 12 co-founders of Alibaba, all of them with equal shares in the business. That was a powerful team, and obviously he was right. So another example of the importance of team. And I think it was Rodrigo that mentioned taking a leap. I spent early part of my career as a software entrepreneur, started a bunch of companies. I mentor people today, and taking a leap is an important part of being successful in the business. You have to go and do it. And talking about doing it, designing the product until it's perfect, those are kind of mistakes in comparison to getting out there in the market and doing it. So I appreciate that comment also. If we, all of you obviously have become and must be, to be up here on the panel, very good at managing your time and focusing your time on the important things, because time is the one thing we really can't get more of in life and is a very limited factor, very scarce resource. I'm curious what you each spend the most of your time doing in a given sort of work day, business day, leaving family out. I wish I could spend most of my time with my family, and I actually do. But I'm curious, and maybe, Romualdo, you want to start. Where do you spend most of your time in a given day related to work?
How can I describe this? I'm not here. Like, you're here in the present. I live in the future. And in the future, where I spend most of my time, we have the largest private equity firm that deals with millions of foreclosures that we picked up with zero acquisition.
You have vision and aspiration for sure, and persistence. You've said this several times. This is good.
So most of the times I'm even though it might seem sometimes I'm here, I'm not. I'm always consistently working on it. Mm-hmm. And then I can see hundreds of thousands of millions of people that I've helped, and without me, they would have lost their home.
Perfect. Okay, great. Ira, you want to comment?
For me, it's really about exploring and understanding people and seeing the beauty of every person and trying to build and create value in the relationship. I just this past weekend was somewhere with my wife, and I met a woman there, just happenstance meeting, and she works with people who have been paralyzed, and they're able to restore movement. Like, incredible. I mean, I could have just, bypassed her, but whatever. I said, hello, what do you do? What do you do? And she told me, and really trying to understand who people are, what their interests are, and what can I do to try and help and build value in what they're doing. It opens a ton of doors, and you can do a lot of good.
Okay. Okay, answer. John, what do you spend most of your time on in a given day?
The factual answer is absolutely true, although it may seem weird. What I do, and I like to do, is to speak to managements all day long of companies, set up with another person. And that is the best part of the day. Twice a day, our team meets at 8:30 and 2:30. At 9 o'clock, we meet with another team, a firm we have a relationship. From 7:30 to 8:30, we speak to as many firms on Wall Street as we can. And before 7:30, I speak to as many people. In the middle of the night, I speak to as many people as I can. And then I try to do whatever else I want to do. Perfect.
I try to at least to spend most of my time talking to clients and stakeholders in what we do. I really truly believe that there's no replacement for having that open conversation. There's no portfolio performance that's going to change anything drastic, but when you get that level of comfort and a level of trust, and your client's actually able to talk to you about non-financial things, and you get pulled in and you start building a true relationship in life together, then you're really building something which is for kind of like forever. So I truly believe that that's where I'd like to spend most of my time. Sometimes it doesn't really happen.
So back to the communications with your partners, your
Absolutely.
investors, and so on. Simone?
I think at this stage that we are now, I have 1/3 of my time is talking to clients. 1/3 of my time is discussing strategic projects in the bank to make sure that we are prepared for what is coming, technology and other processes. And 1/3, it's hiring. It's trying to find talent.
Finding the good people, building
Yeah.
that team. Always
Yeah.
got to be building that team.
Yep,
Yeah, that's a tough one. How many people are there in the firm at this point?
385 in Southern US.
Wow. Okay. Well done.
Can I say one? Can I
Please.
say one more thing, which I would suspect applies to all 5 of us? Maybe not. If you're outside the securities business, you see the prices on TV, you see the prices in the paper, you see your prices on your quarter reports. But it's like these mortgages. Everything is bought and sold by somebody somewhere. It's like football. I call it the line of scrimmage. I like to speak to traders. I could spend 24 hours a day speaking to traders. I mean, I don't know where all these mortgages come from, but they got to come from somewhere, and you have to speak with them. And so we all have to speak with originators, distributors.
Okay.
The distribution part of the securities business is incredibly powerful and important.
Okay. Very good point. Quick question. Do we want to do Q&A, Richard? Is that part of this panel? Okay. So we'll come to that in a few minutes. So if one or two of you have a question, we'll have a few moments for that. I have another question for you, though, that's maybe a little bit out of the box. I'm curious. The world is full of challenging problems today. Things are changing, evolving, I guess as it always does, but we're here today and there are some stresses and challenges in our lives, in the world, in business. What out there in the public world worries each of you about your assets, about your own future, maybe your family, and what do you try to do about it? And I mean current concerns from the world today. So anyone want to start?
I can start. I mean, one thing that takes my sleep at night is cybersecurity and fraud. And I think this is very complicated because you can do whatever you want and put a lot of money and make sure that you are on top of everything and you never know
It's
when
still
it
gonna
happens.
happen.
Yeah. So that is my biggest concern. And I think the next one, due to the situation that we are today, it's the geopolitical risk, which is something that is very hard to price in assets and to predict. But we see Ukraine that everybody thought would be a short war and it's still there. Then you see now Israel and Hamas and all the situation in the Middle East. And we don't know what's coming and elections and all that. So I think the geopolitical scenario is something that has a lot of potential to surprise us.
Okay, that's certainly a big one, particularly for some of us in the regulated world, as you are, and my firm is also. You know, cybersecurity hit. Of course, that's true for anyone. Retail chains also. Cybersecurity hit, and you got a real problem. So that's a very important one. Good, thank you. Rodrigo?
Well, I kind of wake up every morning and I know what I know and I know what I don't know. So I think I'm always trying to learn more and you know, try to mitigate some of those kind of like market concerns as far as what we're doing with clients. But at the end of the day, it's really about diversification. When you're talking about portfolios, it's really about how you put your money to work.
So you're worried you don't have enough. You want to make sure you have enough diversification across your investments.
Well, yeah, we kind of spend a lot of our time educating clients and educating families as to not only the benefit of it, but the true security of doing that. Truly diversifying across markets, across the world, across different types of investments.
Of course, the balance to that is, you're absolutely right, diversification is essential, but the balance to that is you don't get rich without going long and deep on one thing. And that's not concentration. It's hard to get really rich with a fully diversified portfolio. And so that's the tension, but you're absolutely right, diversification is key. It's key. John?
I said that at the beginning. I talked about the diversification
you did.
of the client. I think that from a big perspective, and this may take a moment, the central decision is, first of all, America is a great country. Amazing amount of innovation going on. And you see it and you come and it's compelling. But the backdrop is the social structure of the United States gets manifest in the judicial system and our markets and our values. And it is very possible that we're going to have a big inflation. And in that world, you're going to have to own things that produce the new cash. Well, that's the
Sorry, things
predominant
that produce
idea.
what? I'm sorry, I couldn't hear you. Things that
The
produce.
new cash, as you have
new
inflation,
cash.
cash is worth less and less,
Yep,
you need
yep,
more and
yep.
more, but it's a different cash. On the other side, indexing is a phenomenal feature in the world. One thing about indexing is nobody knows what they own. When all they do is they want to make money. So when they go down, you could have the most remarkable selling, and you could have a volatility of equity markets easily foreseen that could shake people. So I do think while you need to be invested, you need, particularly in this interest environment, to have cash. And so finally, domestic structure is very challenged. And you have the question of the emergence of China and destructive technologies, whether electronic to destroy our chemical plants, destroy our utility wires, biotech. There are absolutely systemic risks that are present and deliverable that cannot be ignored.
So how do you handle those? What are you doing to? What are you doing to mitigate that concern?
We're all here on Earth. The answer is, I think it's a combination of diversified investments, but some cash standard that I view as an amount based on what are your after-tax, after philanthropy, after expenses, cash yield for a period of time. And I think everybody should operate with a careful 5-year budget of what they and their children need.
And you can't use the word guaranteed cash yield, but you want it to come as close as you can to that.
At the present time, you can buy 3-year treasuries.
Yeah.
I'm an equity person. You buy 3-year treasuries a little while ago, yielding 5%.
Ira, what concerns you, and what do you do about it?
So obviously the world is full, unfortunately, of a lot of concerns. Most are out of our hands. And I do what I can, on the macro things. But for me, the most important things are all the things that are within my reach, within my purview to make the world better. I read a public company report 2 days ago. They had bad earnings. I just saw a company that went bankrupt. I called the bankrupt company. I called the public company. We had a conference call earlier today about them possibly rescuing and buying this company. Anything that's in our purview to do, and that could be including greeting a waiter or waitress that's here that cleared their table and saying thank you very much and making their day good. Everything is, we have to focus on what's within our reach to do to make the world better. And that builds relationships and builds opportunity.
That's perfect. Romaldo, a minute or two, real quick.
What are my biggest fears?
Yep.
That the financial and lending world is too impersonal. And I could go out there and I guess I can buy billions of dollars worth of notes. But I want to do the opposite. I'd rather help the person. And it's not, when I say me, there really is a team of us. That's why I said there's a team of people here. And I never could have got here without mentors and a team of people. So always, when I say me or I always mean we and us. But to be able to reach the mass market in such a way on the highest ticket product that is out there is amazing. And then it's the flip side, the humanitarian side, that instead of buying the note and then talking to the customer, we talk to the customer first. And then if we buy the note, we already know that we're gonna be able to make it perform because we're doing several things. We're restructuring their lives and we're putting them back on the right financial path for success. And that, I believe, is what needs to happen to bring the humanitarian touch from the financial world to the consumer.
That's great. Okay. So I'm going to renege on my offer to do questions. I don't see anyone standing, and give you each 15 seconds. What's the message you want to leave with the crowd? Simone? Very briefly.
It's a difficult one. I think plan well for the future. In terms of investments, let's say this way, I think it's healthy to have cash on the side. I agree with you, and I think cash today has value because you can have interest rates. And I think people need to remember that we were, since 2008, with rates at zero. So now that you have that chance, you have to really rebalance your portfolio, look at your portfolio and make sure that you are well prepared for the new year and for things that will come up next year, for opportunities that will come up. So I think it's important to review the portfolio, look at the cash, look at your positions, going back to diversification, everything that was said here, but don't procrastinate.
Okay, perfect. Rodrigo, a thought to leave with everyone?
Yeah, seek a high level of governance. I think in everything that we do, whether it's within our businesses or in the investments that we're making or with the managers that we're working, I think it's extremely important to have that view, to be able to have that little bit of that control, to be able to add value and have really be able to tell your clients that, I know what's going on and I can understand all of this.
Good.
In an orderly world, to deliver the results our investors feel satisfied or expect or is fair. In a disorderly world, say, wow, you saved me.
Huh? Pretty cool. Ira?
I bought 11 companies in a bank, all of them in some states of disarray. And we were able to save those companies and help hundreds of people and thousands of people in those families. And if you do good and you do the right thing, you can help a lot of people and you'll get great returns out of it too.
Excellent. Romaldo, you get the final word.
Yeah, so if you yourself have an extraordinary vision and you're a humanitarian, you need to work with extraordinary people. And that's why I'm here and that's why all of you are here. So the best thing I could say is your net worth is your network, and get together and find the best mentors you can. And I can't vouch for the other three panelists, I'm sorry, but I can vouch for Ira. So if you want a great mentor, this is the man to talk to.
Good comments. Thank you. Thank you each panelist for being here. And thank you, audience.
Thank you.
To listen to this full panel, join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.